Joining me now are Brian Nagel, Senior Equity Research Analyst at Oppenheimer Co, and Ed Yruma, Retail Analyst at Keybanc here in New York. Brian, you're sitting next to me, so let me just start with you. You know, there's been a lot of talk this holiday season about discounting and how long that retailers were going to wait to really do deeper discounts. Do you think that we are going to see more of that this weekend, sort of last-minute discounting?
There'll be a bit. In my heart, I follow the hard lines retailers, so that's largely consumer electronics is probably the easiest way to play within hard lines. And I think there will be some more discount as we approach the Christmas holiday, but inventories are lean. You know, there's not a lot of inventory that could force that to happen. I'm sure Ed has some comments on his soft lines to that regard too. But so I think there will be some promotions, but I think they'll largely stay measured.
Ed, what do you think here? Do you think that retailers are feeling squeezed enough that they are going to need to cut or not?
We're starting to see some select promotions, but I think Brian's comments were spot on. Clearly, inventories are pretty low, so you haven't seen the level of discounting that we saw last year.
So let's get to some of your picks, gentlemen. And first of all, let's get sort of the summary here. The winners and losers, or winners and cautious, as I believe that Brian terms it in terms of his stock that's not going to do as well. Both of you like Tiffany. Ed, you like Nordstrom as well. You don't like Abercrombie or Aeropostale in the losers category. And also, Brian, you like Bed Bath & Beyond, but you're cautious on Best Buy. So let's start with Tiffany. And Brian, you know, it's interesting here that Tiffany has done so well in an environment where the perception is consumers aren't spending as much. So how are they able to succeed here?
Well, I think what's happening with Tiffany, it's benefiting, as I look at the consumer in general, I think the higher end consumer, or that luxury consumer, is coming back first. And I think the big driver of that is just the stock market. We've seen a pretty significant rally in the stock market, as you know. I think that's helping to spur better confidence among those higher end consumers and drive better sales at Tiffany. I think to some extent, maybe they're starting to benefit too from easing competition within the space. The jewelry space was very competitive last year, as a lot of struggling chains were trying to stay open or even clearing merchandise. We've seen less activity in that regard this year.
Well, and Ed, it's interesting that Brian mentions competition, because Zale has come out and said that it's not as strong here. And Zale, obviously, speaking sort of to a different market. But what is Tiffany doing right that some of the other jewelry retailers are not?
Well, we think one of the most important things that Tiffany has done is they protected price. Last year, you didn't see the type of promos at Tiffany that you did at other retailers. So we think consumers feel better about buying at Tiffany. They feel that they're actually receiving a value and not needing to wait for some kind of sale or promo that maybe you see at some of the other jewelry retailers. So clearly protecting their pricing.
Now, that said, gentlemen, Tiffany has done quite well this year. It's rallied more than 70%, and it's selling at a premium to some others in the retail space. So, Ed, why do you think that it still has room to go here, given that it is at this premium?
Well, one of the things we're watching for in the beginning half of 2010 is really that they're going to have some benefits from favorable raw material pricing. We think this could be a really nice gross margin lift for the rest of the year. And in addition, they're making some really solid inroads in Europe. So we see growth there where other retailers maybe don't have the square footage growth that Tiffany might have.
All right, let's move on to some of the other winners here. Brian, you also like Bed Bath & Beyond. And this,
that's correct.
I have to say, isn't one that springs to mind during the holiday season necessarily, because you don't necessarily, I think of it more as a functional retailer than a gift retailer. But is it benefiting during the holiday season specifically? It
is. It's not. Bed Bath & Beyond, you're correct. Bed Bath & Beyond's not as much of a holiday play as, say, a Tiffany would be, because you don't have as much gifting purchase. But they do see, like other retailers, they do see higher volumes during the holiday period. Either as people buy gifts or as they prepare their homes for the holidays.
And so why is Bed Bath doing better than some of the other retailers where you would buy similar items, like linens, I guess, as a gift, or things for the home?
Well, I think the absolute biggest, the biggest driver of Bed Bath right now is the demise of linens and things. So linens and things went out of business late last year. So now we're starting to lap that liquidation. So that's, I think, a very big driver of Bed Bath & Beyond. Beyond that, though, I think what we're seeing is, and if you look at the results, such as the Pier 1 that reported yesterday, and some of the department stores are saying, we're seeing improving trends in that home category altogether. And I think that's, again, where the consumer is. And the consumer's probably not ready to make a big remodel project in their homes, but as they dip their toe back in the water here, they're making some smaller, kind of spruce up purchases.
Well, Brian, it's really interesting that you say Bed Bath & Beyond is benefiting from linens and things demise, because the stock you're cautious on is Best Buy.
Right.
And Circuit City, obviously not around anymore. You would think that that would be a good thing for Best Buy.
And it is, and in and of itself, it would be. But I think it's interesting. I think there's a very different dynamic as you look at kind of the market share redistribution in the consumer electronics space and in the home accessory space. Home accessories, Bed Bath & Beyond's category, seems to have stayed very benign. The competitive environment stayed quite benign. Whereas in consumer electronics, I think you had a lot of Best Buy, Amazon, Walmart, all fighting for that Circuit City business, and I think that's serving to create more competition. I think the other big, and I'd say to some extent the cat's out of the bag with Best Buy because they reported their results earlier this week. Mm-hmm. The other big issue they're contending with though is prices on these key products, primarily TV, coming down dramatically. Now Best Buy is operating very well, and I give the management a lot of credit for running very well, but I think they are fighting some very significant market forces or sector forces at this time.
So let's get to Ed for a minute, because teen retailers are what you don't like, Ed, or you don't think is going to do well this holiday season. And I mean, why is that? Do teenagers just not have this income that they can use to buy presents at these places?
Well, we think a couple things. Teen unemployment was very, very high during the summer, and that's the time where teens kind of stockpile and get ready for the year. They're frequently not working as much during the school year. So clearly teen unemployment is a significant headwind. And two, the competitive environment is very, very intense. You've seen competitors like Abercrombie & Fitch, which were not promotional last year, being very aggressive with promos. So you take kind of a really tough teen consumer, you take not a ton of compelling fashion trend, and then you take a very, very competitive environment. It's tough to like the space.
And what about also the fact that we've been hearing that teens are not getting hired as much, say, for temporary work? Is that also cutting into what they're spending?
That's clearly a big driver. Jobs that teens might have taken in the past are now being taken by kind of older folks as they, have employment issues. So clearly the teen market is really troubled right now.
Okay, Brian and Ed, thanks a lot for coming in. We'll keep an eye on all of these retailers during this holiday season to see how they fare.